Hello there, this is fairbinaryoptions.com. Let me write here fairbinaryoptions.com, and what we have is the euro and the Japanese yen pair. Looking at the pair with some bullish eyes. I mean, it has been punished all week. This is a 4-hour chart. Take a look here. Almost in a straight line it has been punished here. And I would say that the move that comes from this moment on should be not in a straight line, but nevertheless to the upside. As you can see, the market broke out of a previous contracting triangle. From this moment of time, this was a contracting triangle, and by the time it has been broken, or after it has been broken, it never looked back. The thing is that the move to the side is neither impulsive, and we should treat it as such. So this would be, from my point of view, a classical falling wedge. As you can see, the market goes and makes a low, and then another low, and then another, but only marginal lows, right? Then another low here to the downside. But these are corrective waves. Take a look here. Even the strong pressure to the downside that we saw this week is actually nothing but a corrective wave, because the move is channeling too well. See, corrections are almost the same. Now it is broken and consolidated above the trend line. Taking into account the fact that this is a 4-hour chart, then this is a bit bullish in otherwise a bearish pattern. But this bearish pattern has some things to consider, and the first of them, or first thing to look at, is of course the break of the two trend line or the so-called two trend line, the 1, 2, 3 trend line that is already broken. So I have here something like the first wave here, the second wave here, all the upside here, like this, the second wave, then the third wave to be to the downside here, 4 and 5. In this arrangement, this would be possible only if the third wave is not the shortest one. So we need to take a look at the move from here to here, and then to take this one to measure the length of this wave here. And as you can see, the fifth wave is shorter than the third. In this situation, we'll have the 1, 2, 3, 4, 5 to be this one like this, and all eyes should stay on the moment that the market is going to break here, the 137.40 area, from this 137.40 area. On a 137.40 area that is broken, the next logical thing, or the next logical target would be the 2 to 4 trend line. But the 2 to 4 trend line here goes like this, So I would say that only based on this 1, 2, 3, 4, 5, let me take a polyline and address this move from this moment of time. So this would be the first wave, corrective wave. In a terminal impulsive move, when you have all these overlapping here, this is a corrective wave. Then this would be the second wave, this would be the third, the fourth, and the fifth to the downside here. Then we should look at a bounce a bit from these levels here. Now we'll have a dual strategy here. Normally what I would like to do, so my personal opinion would be on this one, doesn't necessarily represent an investment advice, but this is how I see markets, and especially this Euro-Japanese yen market. What I would do is the following. For traders that are more aggressive, I would buying call options right here at this level before the 1 to 3 trend line here to be broken. So I would buy call options with end of week expiration date So that would be on Monday at the opening with end of week expiration date. So call options with end of week expiration date. When markets are opening on Monday, and second of all, so this would be the first thing to do, and second of all, what I would also do is I would buy again call options for the traders, or for traders that are more conservative or risk averse. You should wait for 137.40 area to be clear, or buying call options when the 137.40 area is cleared, again end of week or even 1 week expiration date. Thank you very much for being here. FairBinaryOptions.com. Falling wedge on the Euro Japanese yen, about to break high. Thank you and bye bye.